thank you so much to Marine Money for inviting us to participate in this session. I'm super excited to have the panel that we've got today because hopefully, as Elton said, they're going to make me look good because I might not know what I'm talking about when it comes to decarbonisation. Often as lawyers, we're there to do what our clients say, to just document their loans or to fight their battles. And so to put something as thought leadership as decarbonisation in the remit of a lawyer is sometimes a little bit challenging. But it's something that we've decided to do as a firm and something that we're very keen to do. And hence why the white paper that Elton mentioned earlier. And we will have engaged with some of our clients in this room to understand how we as lawyers can help them reach their decarbonisation and ESG goals. I'm going to now move there, because I now have a seat. There we go. Great. And without further ado, I'd like to introduce our panel today. Sitting on my left is Koneberg from Gard. He's a Chief Underwriting Officer for Asia. He's been involved in the maritime industry for a few years, a couple of years ago. And very familiar. And we're super excited to have somebody from the insurance industry because I think when we look at decarbonisation, one of the worries is, well, this is new, and are we going to be able to operate in the normal way? Next to Andre is Jackie Spiteri, who has travelled up from Australia to join us today, so thank you for making the journey. Jackie is a director of an ESG sustainability consultancy based in Newcastle, and prior to that she was deeply involved in Newcastle Port and assisting them in obtaining ESG compliance and sustainable financing, so she knows a lot about the subject. And next to her is Sanjay from Pacific Basin. I don't think Pacific Basin needs much introduction to the group here today, but Sanjay sits as head of their Optimisation and Decarbonisation group at Pacific Basin. So we're happy to have him share today with us. And at the very end is maybe somebody who will not be familiar to many of you because this is Ben Shum. He's from a company called Intensel. Intensel is still a startup? Are we allowed to call you a startup still? Climate tech startup company. And Intensel really uses technology and AI in particular to map out and help companies assess the climate risk of their operations and industry. And Ben has been involved in startup companies and climate for a number of years, and very, very excited to have him on board. So decarbonisation, just before I get into speaking to the panelists, and I'll shut up, Elton said maritime industry is often at the forefront. In part of our white paper investigations, I came under a lot of criticism from the consultants that we're talking about for being involved in the maritime industry. And they say, maritime industry, you're responsible for 3% of greenhouse gas emissions, you're doing nothing about it, the IMO is rubbish, all they're doing is looking at 50% reduction by 2050, you're miles behind the rest of the world. So that was kind of depressing. But I was really encouraged to hear people talking about decarbonisation throughout this day so far. But Ben, I really wanted to turn to you to start with to help us set the scene on why decarbonisation is maybe something that really should be front and centre, and perhaps what you think of the IMO's target of only 50% reduction and what that might mean for us as a maritime industry.
Wow. Okay. So I think from our perspective, so at Intensel, we provide data analytics to analyze climate risk. So we can analyze the risk, physical risk of any building, asset, or companies for any geolocation on the planet. And as we look specifically at physical risk, which is a larger part of climate risk, so we also talk about transition risk as well. And I think in terms of decarbonization and the shipping industry, for us, we probably would look at it from a larger view, from a kind of more zoomed out view, where we look at where it would include talking about supply chain as well as probably origination in terms of kind of possibly shipbuilding and ports as well. So as we talk about decarbonization from our viewpoint, probably look at the entire ecosystem, not just possibly the ships themselves. And so within that, yes, I mean, in terms of decarbonization, I think, yes, we talk about, I think, reducing carbon net zero. But for us, a lot of it, as we see it from ours, is being, again, is regulatory driven. So what that means primarily is for disclosure. So again, all listed companies by 2025 will have to disclose physical risk. And that is really pushing a lot of companies outside of shipping really to at least identify kind of the assets at risk. And so whether, again, that is ports or buildings or assets or physical assets, that really has a large impact. And I think going forward, and I'm sure Jack can speak to this more later, as we talk about scope 3. So we talk about supply chain transition risk. So what does it mean not just for your company, but also the companies that are supplying you? And so that'll be really that scope 3, SBTI, those kind of emissions, both on the emission sides and the physical risk, really will have far-reaching impact on the way we disclose and the way we act on decarbonization.
Thanks, Ben. It's interesting you mentioned pressures from outside shipping. So we're very used to in the shipping industry looking at the IMO, what are the regulations, how is that going to affect us? But you talk about disclosure obligations for this pose, but we're also looking at some other fairly interesting legislation in different parts of the world. So in California, you've got the Transparency in Supply Chains Act. You've got the similar legislation, which I can't pronounce in German because it's like 55 letters long. That came into force in January and it requires all German companies of a certain size to disclose the carbon impact of supply chains, direct suppliers to German companies. And then we've got two pieces of legislation in the pipeline. One is in New York State. It's called the Fashion Act. Well, what's the Fashion Act got to do with shipping? Well, clothes are not usually made in New York. They come from Bangladesh or wherever, and they come on ships. The Fashion Act, and then the new EU legislation, which is in the pipeline, which is called Transparency, Due Diligence in Supply Chains Directive. Both of those will look at companies based in New York or in Europe, and they will be required not just to disclose the carbon impact of their own companies and direct suppliers, but also their indirect suppliers as well, and to disclose the plans that each of those companies has to move to 1.5 degrees. So it's actually massively impactful for the shipping industry, and I think a lot of people haven't quite realised that. But Sanjay, talking to you before, I understand that Pacific Basin is already quite on the journey towards that. What are ship owners actually doing about decarbonisation?
Yeah, thank you, Andrew. So basically, decarbonisation needs to have a roadmap. So at this moment, IMO has set up a goal that there should be a carbon intensity reduction of 70% by 2050 compared to 2008. So now there is a lot of pressure that this goal should be made more strict. So looking at a carbon neutrality by 2050, what should a shipping company need to do? So basically, decarbonization is, you can look at it in basically 3 steps. First is you need to improve your operational efficiencies. So you have just-in-time arrival, you have engine tuning, you have hull and propeller maintenance platforms, those kind of things. And then the second part is technological improvements. So you have propeller boss cap fins, you can redesign your propellers, you can put a gate rudder. So there are, and you can go in for air lubrication or flattener rotors. So that is the second part of it. But operational efficiencies and technological improvements will only get you only 20% or maybe 30% of the way. So how to get to that 100% mark by 2050? That is a challenge. So that requires alternate fuels and zero emission vessels. And there is a gap between these operational and technological advances and the time you get the alternate fuels. So you will have something like bridging fuels. So you may need to get something like biofuels which are sustainable, or maybe some kind of a synthetic fuel. So that is the challenge. So we know what is required, and basically you have to, because even if you buy a ship today which runs on normal fuel, it is not going to last for 25 years. The AER regulations are being made in such a way that now we are talking of a 2% improvement every year. But if IMO improves its goal to carbon neutrality by 2050, that 2% is going to become 4%. And the ship which is running now for 20 years or 25 years, it will not last for 25 years. It will only last for 15 years. So then you have to start putting in some expensive biofuels which are sustainable. So it is going to be a big challenge for ship owners how to navigate this kind of thing. And that is basically how all ship owners are. Right now they are going in for operational efficiency. So you must have a very nice platform. So digital solutions are available now. Basically try to reduce your wastage. And you are then kind of evaluating all energy saving devices and trying to put them on your ships. But like I said, it is not enough for decarbonization.
That's really interesting. Thank you for that. It's interesting to see that we're faced with this challenge, and there's two ways. One, we can embrace the change and say, okay, so let's see how we're going to do this. The other way is to throw our hands up in the air and to say, oh, it's too difficult for us. Andre, and there were two sort of strands to what you were talking about. One was technological and one was operational. So, Andre, from the insurance industry perspective, when you have technological changes, you've got new risks. Are we going to see the brakes applied by the insurance industry, or is the insurance industry going to say, no, this is an imperative for us to do?
Yeah, thank you, Andrew. Hope you all can hear me. Well, first of all, thanks for inviting me to this panel discussion. Gard is a marine insurance company with a global reach. We offer P&I, hull machinery, and energy insurance. And currently we employ about 650 staff. So with our size, we are one of the bigger players in the marine insurance field. And as such, we have a responsibility, if not an obligation actually, to try to take a leading role in this green transition. And you are completely correct. New technology, alternative fuels, will pose new risks. And these risks may not be fully known beforehand. Anyway, we have to take a step forward, be forward-leaning, and be ready to ensure the new technology and the alternative fuels. Because insurance is also a part of the puzzle, and we all need to come together, I think, in order to make this happen. As we gain more experience from these new risks and potential new claims, being in charter party disputes or crew casualties due to handling of new fuels or machinery damages, we have to share the knowledge we get. We have to share the experience with the rest of our clients, with the industry, so that we together can perhaps continue to refine, improve, and get better operations, better technology, better fuel handling, and make it easier for other owners, maybe smaller owners, also to make informed decisions and to embrace these new developments.
Thanks, Andre. I'm interested by that piece about sharing, and we'll come back to that later. And if I don't, please just jump in and make sure that I come back to it. The other side of what Sanjay was talking about was operational efficiencies, and I think we'll come back to that as well. But Jackie, from your experience having been involved in sort of financing difficult assets, might I say, and perhaps you can explain a little bit about that to us. How can financial institutions play a role in enabling. And we heard earlier from some of the bulk industry players that actually it's quite difficult for them to run straight into the arms of decarbonisation because the industry is fragmented, they don't have big capital bases, and they're not quite sure where the technology or the efficiency will go. What kind of role can financial institutions play in assisting the maritime industry achieve its goals?
Yeah, thanks so much, Andrew, and thank you all as well for having me here. As Andrew mentioned, I've travelled over from Australia, and this is my first time in Hong Kong, and it certainly is a fantastic city, and it's really interesting to hear the discussions both during the networking sessions and on the panels around how different stakeholders are addressing ESG and decarbonisation as they all face the challenge in this evolving space. So as Andrew mentioned, my background is in the ports space, so I'm not in the shipping lines, but in the ports, but also part of that kind of broader maritime ecosystem. And I think the way financiers and sustainable financing can play a role is really through incentivising their borrowers to participate in ESG principles and including decarbonisation. So I worked previously with the Port of Newcastle, which is the largest coal export port in the world, and so when you're having those conversations with your investors and your financiers, how do you convince them to invest in your infrastructure asset? And it's a huge challenge because a lot of those investors are introducing fossil fuel policies which prohibit them from participating. And so the sustainable financing really provided an opportunity for that organisation to be able to demonstrate to those stakeholders, those lenders and those financiers, that they were committed to ESG, and incorporating that into their financing was, I guess, a big step for that organisation to be able to demonstrate that commitment. And those financial institutions have their own commitments around setting net zero decarbonisation targets, and so their portfolios form a huge part of their Scope 3 emissions. And so how can they influence a reduction in their emissions? Well, that's through influencing their clients to reduce their Scope 1 and 2 emissions. Elton mentioned earlier that there is a couple of opportunities for participating in sustainable financing. So you can have use of proceeds which is directed at green kind of capex investments, and I think as an organisation, as you start to build that pool of green capex, green assets, then you're going to attract other sources of funding that might not have otherwise been there. You also have the behaviour-based lending, so it's a general corporate purposes facility, but directly tied to that is a suite of KPIs, and those KPIs can address decarbonisation through seeking organisations to set emissions reductions targets focused on their Scope 1 and 2 emissions. But also, extending that ambition and asking them to consider how they can influence Scope 3, and that's certainly something that we're seeing in the port sector. For example, with the Port of Newcastle, we started off with our inaugural sustainability financing transaction, which was a bank debt refi, which looked at our Scope 1 and 2. 3 transactions later, we got more confident and more ambitious, and we had a sustainability transition hedge which wrapped vanilla bond, and this was a way of kind of making that bond green, and that incorporated a Scope 3 target, and that Scope 3 target for a port obviously looks at its supply chain, and shipping certainly forms a part of that supply chain. So how can the the two parties work together and collaborate? So we are an ecosystem, we shouldn't be working in silos, and if we're looking as a port to how we can influence Scope 3 emissions reductions, then it's imperative that we engage with the shipping sector as well, so we can make sure that we're incorporating what their needs and expectations are.
Thanks, Jackie. It is really interesting to hear that actually there are possibilities, even with what seems like a very carbon-intensive industry, to be able to move forward through financing options. Sanjay, we were talking earlier, and frequently there has been in the past a trend of charging a green premium on sort of SLO financing, which is maybe a disincentive. Are there other sort of financing side incentives that you can think of, or disincentives that you would like to see to help the industry perform?
Yeah, I will try to tie in with the IMO goals. So IMO, let us say, puts up a goal of net zero by 2050. And let us say the complete world also thinks in the same way, that we should have net zero by 2050. So let us look at the numbers which are involved. So I recently I read that the world is now a $100 trillion economy. And the amount of money which is required to decarbonize the entire world, let us say, to come to net zero is around $110 trillion. It sounds a lot, but as a percentage of GDP, with the increase in the world economy, it's only less than 1.5% of the GDP. So 1.5% sounds less, but if you again convert it to trillion-dollar terms, so you will have $3.5 trillion of investment required every year from today till 2050. So where is that money going to come from? So you have US and the rich countries, they need to put up around $1 trillion. China would need to put another $1 trillion. Another $1 trillion will come from the middle income companies, and around $500 billion from the poor countries. That means every year we need an investment of $3.5 trillion. So where does shipping come into this picture? It is just $40 billion. That means less than 1% of this investment is required for shipping. And out of this $40 billion, only $10 billion is required for asset renewal. That means the ship owners need to spend only $10 billion more than what they would have been spending in any case. The balance is $30 billion. That is to go on the bunkering infrastructure and supply of these alternate fuels. So the finance for shipping is just 1% of what is required from today till 2050. So I am not too worried about that. There is enough money for that. What I am worried is that you need $2 trillion of investment every year for the fuel. And you are going to compete for that fuel with the cement producers, the steel producers, the road transportation. So right now shipping has been buying the bottom of the barrel fuel. At that time you will be competing with everybody for the premium fuel. So the issue is not shipping finance, the issue is basically the finance to make the alternate fuels. Once that is there, shipping will coast along. So $10 billion is not a big money, $30 billion is not a big money, but that $2 trillion to make the fuel, have it available, that is a big challenge.
Yeah, there certainly is a big challenge.
Yeah, so what shipping companies need is some incentive to use that alternate fuel, because alternate fuel is going to be, let's say, 4 to 5 times or maybe 3 to 4 times more expensive than what you're using today. So we need something like a carbon tax. So everybody needs to be taxed on their CO2 production, or let us say the fuel you buy. And the early movers have to be compensated for the money they are spending on the new fuels. Otherwise, no shipping company is going to use a fuel which is $2,000 a metric ton, because there is no charterer who is available who is going to pay more. Maybe in the container sector you have IKEAs and Nikes, but in the bulk carrier segment you don't find those people. So that is how it is going to play out, unless you have a carbon tax or you have a system where early movers are compensated. It's going to be a very difficult task.
It's very rare for ship owners to call for more tax.
No, but without a tax, or let's say something what EU ETS is going to do, things are not going to move. Because unless it hurts your pocket or your bottom line, that behavioral change doesn't happen. So you look at Hong Kong, till they put that 50 cents charge on that plastic bag, there was no change. Yeah.
Yeah, I think it's an interesting proposal, and it's obviously one that would require quite a lot of global consensus in terms of getting some kind of uniformity, because otherwise what we'll get is pockets of so-called carbon tax havens, I guess.
Yeah, you are absolutely right. Getting the finance is a problem. Like US had to struggle such a lot just to get that IRA bill passed. And the bill is, if you add up everything, it is less than $1 trillion. And we are talking of $3.5 trillion of investment every year. So decarbonization is a very intense task, and unless everybody steps up to the task, stop unnecessary wars and those kind of things, it's not going to happen.
It's also a big challenge. I think a lot of people will go, yes, reducing carbon intensity, decarbonisation is very important, but if suddenly there becomes a big tax element to getting that, there could be a disincentive to actually moving towards a zero carbon shipping community. Andre, I wanted to turn to you and just maybe make a slightly provocative suggestion. If the green technology is in fact better for the world environment, does it become less risky? And does the carbon-based economy become more risky in terms of potential claims? And would that see an adjustment in insurance premiums in favour of ethanol-powered ships, hydrogen-powered ships, whatever they are in the future, so that ship owners can say, actually, I'm incentivized to do this because my insurance premiums are low?
Thanks a lot for that question as well, Andrew. And we get that question quite a lot these days, obviously. Quite a few owners, they have some kind of programs or initiatives or something they want to try out, and they also want to get something from us. But listening to the numbers given by Sanjay here, both in terms of investments and increased operational costs and taxes and what you have, I'm afraid a small reduction in insurance premium may not make a big change to it. Anyway, I think what we need to remember is that insurance is basically transfer of risk from one party to another against a risk premium. And basically, over time, the premium needs to reflect the risk and the claims you pay. Otherwise, you lose money. So I think that's the starting point. Another factor to consider here is that insurance premium is not necessarily, a price list, a standard tariff, if you like. Every premium is a function of a number of factors. It could be the vessel type, the age, the classification of the vessel, the flag, the management, the ownership, the financial situation of the owner, and not the least the performance in terms of claims over the last couple of years. So I think, a small reduction of insurance premium will not necessarily be very transparent or easy to verify. So maybe this is not the best way to move forward here for the insurers. But I think another area where the insurers may play a role, a more sensible role in my view at least, is to engage with stakeholders and research communities in order to better understand what lies ahead of us, prepare for it, develop new products, new services, understand the risks better. And one initiative that we have in Gard is that last year we entered into partnerships with the Center for Global Maritime Decarbonisation in Singapore. We also entered a partnership with the Maersk Zero Carbon Shipping Initiative, both not-for-profit organizations exploring different pathways to decarbonisation, being it on finance, on technology, or collaboration models. So from our side, what we will do is that we will provide financial support to these initiatives, and we will also take an active role in the initiatives by offering some of our in-house risk experts to take part in the discussions and work.
Thanks a lot for that, and for again driving back this theme of collaboration and sharing and information sharing. On that theme, I guess, and also on the theme of what can we do now, because it is very tempting just to throw our hands up in the air and say, okay, well, we'll run our dirty ships for a few years and then we'll diversify and become real estate investors or something. It's a much easier race. Jackie, what steps can people like ship owners and participants in the maritime industry take right now to help reduce their carbon footprint, for want of a better word?
Yeah, thanks, Andrew. And so there's only really a finite amount of carbon that we can put into the atmosphere before we lose the opportunity to meet that 1.5 degree trajectory that we're all kind of working towards. And so, you know, these investments, these big capital investments in fuel transition and zero carbon vessels take time. And so you're right, what can you do now? And there's quite an innovative R&D project that's coming out of Europe that's called the Blue Visby solution, and this seeks to, through a multilateral kind of platform, achieve emissions reduction through targeting the ocean passage. So we've all heard of sail fast and then wait, and you end up with a multitude of vessels sat at anchor emitting whilst they're waiting to get into port. And we have seen some successful just-in-time arrival system with the Port of Newcastle, which is obviously where my background is, being one of those. But they don't work everywhere because there's complexity in terms of the terminals and various other stakeholders in participating in that. So this Blue Visby solution looks at the ocean passage only. It doesn't seek to look kind of beyond the anchorage into the ports. And through this approach, they've identified that they can save up to 15% in emissions reduction through adjusting the time of arrival. So Blue Visby works with Napa, who are a subsidiary of Class NK, and they have developed a software solution that tracks vessels and looks at the receival rate of ports to be able to provide an optimized arrival time for the vessel. Now, obviously, there's a lot of stakeholders involved in this, so how do you get everybody to play nicely together? And one of the partners of Stephenson Harwood is one of the founding members of this Blue Visby solution, and they've devised a contractual architecture which promotes, I guess, everyone to play nicely together, so the vessel owners, the charterers, the cargo owners, and this contractual architecture is based on the rule of general average. And so rather than sharing the costs, the solution looks at sharing the benefits. And so whilst you might not have as much demurrage, you would have greater costs as a result of fuel savings, and these would get shared among all of those stakeholders. So it's a really great initiative. It requires collaboration. It's an R&D project, and it's independent, and so therefore it provides a really great platform for that emission reduction to be achieved in the short term. We're currently working on looking at running a prototype in Newcastle, and that will enhance their current just-in-time arrival system even further.
Thank you very much. I'm conscious we're coming to the end of our time, and I just wondered whether, Ben, you, having heard some of these insights into what is happening, what thoughts are happening around decarbonisation in the maritime industry, and obviously as a climate tech kind of company, what kind of tech solutions do you think there are tech solutions that can help us as well? And are we doing enough quickly enough?
I think, just to talk to Sanjay's point, as we talk about like operational efficiencies, we talk about technology, and I think as a lot of stakeholders and across all industries, it's a reaction to regulatory pressure. So I think, as we will we'll see technology help operational efficiency, the technology help fuel efficiencies. I think from our standpoint, actually, information and data analytics is really one of the first points, whether it's tracking your carbon emissions, whether it is analyzing the risk of a 1/100 flood across all your assets. I think we really see that as being the first step, and we see that reflected in regulatory pressures as well. So I think especially a lot of in Europe, in terms of what you have to disclose, and a sector that actually is currently the receiving end of that are financial institutions. So we're talking about pension funds, lenders as well, and how that affects interest rates has a broad effect as well. So I think from our end, looking at using technology to analyze and assess risk whether again from carbon or broad from physical risk, is really one of the first steps.
Well, thank you very much. Do we have time for one question from the floor? Andrew's saying no. I think you will agree that we've got some really fascinating people on the panel today, and they will be around, so if you have your questions, please do find them and speak to them. They'd love to share their experience with you, but if you join me now in thanking them so much for sharing their time with us.